It's the day after the MPC announced their decision to retain all economic parameters, the 25th time that decision is being taken out of 28 meetings. So you can expect that there'll be a that will form part of our conversation on this episode of Business Morning on Channels Television. Good morning, and you're welcome. I'm Ini John Mekwa. Well, yesterday, the Monetary Policy Committee meeting announced its first decision for the year, which turned out to be in contrast to monetary policy normalization approach, which major global economies are adopting at this time. The central bank governor who made the announcement said that all existing parameters with the lending rate at 11.5% will be retained, and that's what came out of the two-day meeting of the MPC. He explained that the meeting had to consider not just inflation, but also price and monetary stability approach for economic growth. So those are the parameters that have been what Nigeria has been working with for some time. Now we have Professor Akpan Ekpo, Professor of Economics and Public Policy at the University of Uyo, joining us now to tell us what he has to say with this. Good morning, Prof. Good morning. Welcome to the show.
Good morning, and thank you for having me.
Good to have you. So the CBN governor believes that inflation surge that was recorded in December is transitory. I know we've heard this word a lot. We heard it a lot last year, especially when it comes to food inflation. He believes that the supply of food with projects like the rice pyramid will taper inflation in this quarter. What do you see? Do you see a tapering of inflation in the next few months?
Well, it's hard to say, because if you can recall, we've had a decline in inflation, I think 8 times. So this is the first time that we are having a marginal increase in the inflation rate. I think if all what government policies are put in place, we might see a deceleration of inflation rate marginally over time. But the exact percentage we cannot tell. But for now, I think the inflation that we are experiencing now is a result of the expenditures during the festival season. My worry is more on the food side of inflation. I don't see that tapering off except we sort out the security issues to enable farmers to go to their farms and produce enough, because it's really a supply problem. So I can see why perhaps the MPC left the rates the way they are, or the way they were, because it's too early to adjust the rate in order to fight inflation, since out of 8 times, it's just the first time that they have made a marginal increase.
All right. So with this retaining of the rate, should Nigerians and businesses expect any change, or do we just see things the way they have always been?
Well, we should definitely, if government implements its policies aggressively, we should see a change. Don't forget that the president just approved the National Development Plan. If we begin to implement that plan, and then we begin to implement the budget for this year, there should be a change, but how fast will that change come is another matter.
And what kind of change also, Prof? What kind of change?
I'm talking about, for example, the economy is suffering from stagflation. So hopefully the sluggish growth may improve, we might grow better. And when we grow better, it will be good for all economic agents, but if we don't implement the budget the way it should be, then I think we're going to have problems. Because don't forget that as we speak, the economy is still in a stagflation phase. Unemployment is still 3.3%. As you said, inflation rate has increased slightly, still double digit. The poverty incidence is also rising, and the misery index. So even if we see a change, it will be very, very marginal if we implement the programs in the development plan and in the budget. If we don't implement them aggressively, then we'll see further deterioration of the economy. And also don't forget that even if the economy grows, it has to grow at least double digit for a long time to have any significant dent on the macro fundamentals. So I don't really see, except we look at things at the half of the year, around June. But in the next 2-3 months, I think things will just be going, will be going up and down in terms of the system. It'll be like a roller coaster for a while.
All right, and Nigeria's economy is very import dependent, and now the U.S. Federal Reserve is expected to hike interest rates today. What spillover effects do you see?
Well, you see, don't forget that the issue of inflation is very global. It's a global problem. But in the developed countries, they have more problems. So that's why the Fed is trying to hike the interest rate. If they do that, it will affect us in the sense that most of our debts are denominated in dollars. So we'll pay more for our debts. And that's the first impact that we're going to have. And also, those countries that we import from, the price will go up, and so we pay more. And that is why we need to, as much as possible, build an economy that is not too dependent on, especially on things that we can produce domestically.
And some people have also hinted that it most likely would affect capital importation, which is not in a very good state at this time anyway.
Yeah, of course. When I say if they hike the interest rate, or whatever they produce in that country, the price will go up. So if we import capital or whatever we import, of course, we'll pay more. And it's a shame that at this point we're still having a lot of capital importation. We had thought that we need, even if we import capital, it will be for a while. We should study those equipments and see whether we can fabricate them here. But over the years, we've not done that. So definitely, all the price will go up, and we have to pay. We have to pay the price. I mean, we have to pay more for capital imports. And yeah, we need those capital imports to produce goods and services here. Don't forget that our manufacturing sector here is not at optimum level. As we speak, that sector contributes at least, I think, not more than 10% to GDP. So there will still be capital importation, and we are going to pay more for it. That's the irony of the hike in rates in developed countries like the United States in particular.
All right, Prof, thank you so much for sharing your thoughts with us the day after the decision of the MPC. Enjoy the rest of your day.
Thank you very much. Thank you.
So another burning issue is the proposal by the federal government to extend the petrol subsidy regime by 18 months. What impacts will this have on the Nigerian economy, on the Nigerian people, and of course on businesses? Join us for that conversation after the break. This is Business Morning on Channels Television.